Hi, everyone. Thank you so much for joining us today. Today, we are going to be doing the seventh pillar of a successful sales tax strategy in these pillar breakdowns. The focus of today is sales tax returns. And quick reminder, this is the breakdowns of a seven pillar, but there is a bonus pillar that we are going to do in 2 weeks about audits. So hopefully you can join us then. Hopefully you've been able to join us for these webinars. We appreciate having you here. And before we get started, let's go over some housekeeping items. So first and foremost, if you are here for CPE credit, there is a few things that you need to do in order to receive that CPE credit. You will need to answer our poll questions as they pop up on your screen. If you have any issues with that, just send me a message. I'll help you get it sorted out. You will also need to fill out the survey at the end of this webinar. And again, you have to do both of those things in order to receive that CPE credit. Couple other important things here as we go along. If you have questions as we are going along, please reach out and ask those questions. You can use the Q&A button. If you wiggle your mouse around, you'll see a little Q&A button pop up. Ask your questions as you have them. We are going to do our best to address them at the end of this webinar. So sometimes we follow up with you via email, but ask your questions as you have them, and we will do our best to answer them at the end of this webinar. We also are going to be linking today's slides and handouts in the chat feature once we get started. They are already uploaded to Zoom and they will be emailed to you in 24 hours. So there are a few ways to get your hands on the slides and the handouts today. And a couple other important things here. We do have what we call the Salt Vault. In the Salt Vault, we have access to pre-recorded versions of all of the webinars we do. There's a good handful of those. They do offer CPE credit in those pre-recorded versions. And we have access to a lot of other really helpful information as well. You can see a small list of a part of what's in there and what the value is. You can see a full list on our website. There's also a video walkthrough. So if you have interest in that or have more questions, please reach out and ask, and I'm happy to give you some answers. And let's do some introductions here. So Sales Tax and More, we are a full service consulting and solutions firm. We have a really great team here of experienced tax professionals who are very dedicated to fulfilling your state tax and related needs. So we do a lot of sales tax returns, sales tax registrations, consultations, research, audit defense, exemption certificate management, and like our name states, more. So if you have questions about our services or you'd like to work with us, please reach out. We'd love to hear from you and we'd love to work with you as well. And a quick introduction for our founder, Michael Fleming. Mike's state tax knowledge is very well rounded, and he has helped thousands of companies of all sizes and in all industries, and is especially well known for his work in the e-commerce industry. And Mike, if you want to take it from here, let's get started.
Okay, Ellie, thank you very much for that introduction, and thank you everyone for joining us today. We do have a lot of information that we're going to go over. We're going to go over some sales tax return basics, paper returns versus online returns, what type of info to track. We're going to touch on balancing and notice management, reconciliation. We're going to talk about data. We're going to talk about paying the tax. And then we're going to cover some red flags. We're going to talk about if you're doing returns internally versus outsourcing. We're going to touch on not all providers are equal. When we start talking about software companies, some of the software companies can do all of the returns you might possibly need. Some of them cannot. We'll get into more of that. Some points to consider when choosing a provider. Some questions to ask them, what some best practices are when it comes to sales tax returns, and then some cautionary tales. So a lot of information to cover today. Before we get started, Ellie, we want to do this first poll question.
Absolutely. And we just want to know, did you attend last week's webinar? We hope that everyone had the chance to. If you didn't, that's okay. These webinars can be attended just one off. But we want to get an idea of who's been able to come week to week. So Mike, we can leave this question open and I'll let answers roll in as you're moving through. And again, please message me if you can't see the poll question, you have to answer these in order to receive CPE credit. So Mike, you can take it away.
Okay, Ellie. All right, so basically two ways that you can do returns. You can do them online. More and more states are wanting you to do them online. Or you can do paper returns. Some states still allow paper returns. Some states require online returns when you reach a certain level of sales. Sometimes back returns need to be done on paper. So there's all different scenarios as to when you may or may not have to do an online return. Once you reach that certain level, you have to do it online. And it can create a whole new set of problems when you're filing online. Number one, you got to make sure that you have an online account set up. And you would think when you've registered, they would automatically set up these online accounts. Unfortunately, not all of the states do. And even the ones that do, you sometimes have to then link your tax account to your online filing account or to the online sales tax account. Balancing, when you're filing, on paper, um, balancing is not a big issue because you can still remit it, and if the state doesn't like what they see, they can always adjust the figures. But when you're doing it online, a lot of states you actually have to balance out, otherwise you will not be able to go forward. So the big deal is this balancing. Sometimes you're maybe collected the wrong rate. You got to make sure that it's what the state's expecting. So you have to make adjustments sometimes just so that you'll be able to enter the data and be able to move to the next page and hit that submit button. Because if you're not providing what the state thinks they should be getting, that's an issue, not an issue with paper returns. Also, due dates are different when you're filing online. For example, the state of Texas and the state of Florida, if you're filing online, you've got to have the money there, and you really want to try to get filed by the 19th of the month. Whereas if you're doing paper returns, you have until the 20th of the month. So some big differences between online and paper returns. Online accounts, as we said, you have to have an online account to file. States generally don't make things easy when it comes to anything. It's generally a separate process from the registration. Sometimes it's tougher than the registration. There's a lot of letter IDs. For example, the state of Washington, when you register to file sales tax in the state of Washington, you get like 5 or 6 letters from them, and each letter has a letter ID. And you got to figure out which is the right letter ID that you use to be able to go in and link up your tax account with the ability to file those taxes online. So nothing is ever easy when it comes to the states. You have to have a good system, a good tracking system for the websites where you're going to go to file. I mean, if you're outsourcing this, you don't have to worry about it. But if you're doing this yourself, the more states you do, it's a little bit hard to keep track of all this. So you got to keep track of all the websites, all the account numbers, all of the tax types, usernames, passwords, emails, security questions, other taxes, etc. Now, we create what we call a tracker. We have working trackers for when we're registering, and then we have the final product. We call that a shared tracker. And I'm going to show you an example of one in a second. It's going to contain all the information needed to file on your own. It's also going to have all the information that a third party would need. So we suggest if you're doing the registrations yourself, then you create something like this for yourself. You have someone else doing the registrations. If we're doing it, we're going to give this to you. But if you have someone else doing it, you should really create this. A lot of companies that do registrations don't provide anything at all like this. When companies are transferring their returns to us for us to file, this is one of the biggest issues. The information is all over the place, and sometimes it's actually missing altogether. Um, while this is on my mind, we talked about, keeping track of emails. A lot of times, someone will leave a company and the emails aren't updated. And these online accounts, the email gets deleted because the person left the company, and now you can't access these online accounts. So that's quite a big issue. So even if someone else is filing your returns and they've been in there, if you ever want to get back in there, if you want to change companies or anything along those lines, you're going to have to get back into those accounts. And it's quite the hassle if the email you use to set up those accounts is no longer a valid email. So whenever someone leaves, if they were the one who was responsible for these online accounts, make sure you change the email in the online account, or make sure that you have that email forwarded to someone that they can take care of these types of things. All right, so here is an example. This is blank here. I didn't want to put in any of the our client's information. But this is what we call a tracker. So, it's going to give the state in that first column. Then it's going to give the status. Is it completed? Is it still working? There's any notes in there. Then you have the filing web address, the username and password for that, what email was used to set it up, the tax type, because this can be different. Remember, when we talked about registrations, maybe you're signed up for a seller's use tax or a vendor's use tax as opposed to the sales tax. So the tax type, what the tax is also known as. For example, if you're calling a state and, we'll use Arizona, they call their tax the transaction privilege tax. If you're talking tax. So you should know what the state actually calls the tax. Then you've got the sales tax permit number, the filing frequency, the effective date, and then when the first return is due, any special pins. In some states, there's a special pin you need. And then other taxes and licenses, and then the security questions. So a lot of information on here. Again, if you're having us do the registrations, we're going to create this for you. But if you have someone else doing it and they're not providing you all of this information, this is something you create yourself. And it sometimes is all provided to you at one time. Sometimes the states drib and drab it out to you. So you don't get all of this information. It may be over the span of 4 or 5 different emails and snail mail combined. So you got to be scrubbing all of this information as it comes in. We also put on other state tax accounts. For example, state of Texas, when you register for the sales tax, you automatically registered for the Texas franchise tax. Now, it doesn't mean that you're responsible for filing it, but it's automatically opened up. So a lot of things that create nexus for sales tax also create nexus for the Texas franchise tax. So any of the states that automatically open something up for you are going to be on that second tab down on the bottom. And again, these are things you should be tracking if you're having someone else register you. All right, so some sales tax return basics continued balancing. As we said, when it comes to the paper of returns, it's not an immediate issue, can become an issue if you're out of whack and the state's going to be adjusting your returns. Online, you actually may not be able to submit the return if your numbers are not what the state is looking for. You have to make the adjustments. So it could be that you collected too much tax, too little tax. The reasons are going to be varied for that. Could be incorrect zip codes, incorrect cities, The rate sources could be out of date or incorrect. So there's lots of things that could impact your ability to actually hit the submit button and let this go through. So when we talk about balancing, some common balancing methods. One is that you balance to gross sales and tax collected. That's how we balance. Because we believe those are the two most important numbers that an auditor is going to look at. They're going to look at your gross sales and they're going to look at your tax collected, and they want to make sure that all of your tax collected has been remitted. So that's why we balance to those two numbers. Um, uh, you know, those two, when we say we balance to those two numbers are going to be the same. We're not going to deviate. Whatever your gross sales are, whatever your tax collected are, we're not going to mess with those. The way we balance is we make adjustments to the exempt sales. And this is a very common method, by the way. A number of third parties out there who are doing returns for their clients use this method. There are other methods. There's a forward calculation. And sometimes this is a great tool. If you don't have the ability to collect tax at the point of sale, or you don't know the exact rate, you may want to do a forward calculation. On a forward calculation, the data is run through the software of a person who's going to be doing the returns for you, and it determines what the rates should be, the amount of tax that should have been collected. So we have a small handful of clients who ask us to do this, and there's specific reasons on why they're asking us to do this. We have a number of clients who are using these crowdfunding sources out there, and they know they need to be collecting the tax, but they don't exactly know the exact amounts. So they put a number in there that they're going to use. They don't have the ability to put the exact rate in there, and then they will run it. When they give us the data, they have us do a forward calculation. We tell them what tax should have been collected. The excess tax is either remitted to the state if they collected too much, and if they collected not enough, then they will go ahead and make those adjustments. However, one software company, I don't know if they still did this, but they did this for years. This is TaxJar. And TaxJar ignored what was actually collected. They did a forward calculation, and they didn't really explain this well to their customers for everyone. And this was creating huge problems. I mean, TaxJar was one of the newcomers out there. And, before Amazon started collecting, this was a big issue. Amazon was using Vertex in the background. Vertex had been around for years. They were one of the Cadillacs in the industry when it came to calculating rates. And here you've got this newcomer, TaxJar, and they were saying, well, Vertex was wrong. The rates were wrong. $7,000. This was in the state of California, more than I actually collected. I mean, who wants to pay more tax than you've actually collected? And who is to say that TaxJar was actually right? I mean, they were overriding Vertex. So you got to know what method your provider is using to balance. And they created a ton of overpayments, and sometimes they created underpayments. So, if you collected, $15 worth of tax, and they said you should have only collected $10 worth of tax, well, that excess tax should still be remitted. And unfortunately, not in all cases was it being done. So there's a time and a place for a forward calculation. However, to use it just across the board in all scenarios, major problem. And then there's grossing up. This is another common balancing method. Adjustments are made to gross sales, and they will manipulate the gross sales up or down in order to balance to make this thing fit, so that you can submit the return. I think this one can lead to problems in audits, because when you start messing with your gross sales, an auditor is going to be checking that, and they're going to want to know why things don't match up. A lot of times you'll be able to explain it away, but that's just, once you open up that can of worms, the auditor is thinking that something is wrong, and they're you want things to be going as smoothly as possible with the auditor. You don't want to have problems at the very beginning of an audit. So I don't like the grossing up method. I definitely don't like the forward calculations as across the board solution. It's a tool. It can be used in some situations. I think the best way to gross up is when you're balancing to the gross sales and tax collected. Any adjustments you make to the exempt sales. All right, so notice management. Anytime the state thinks that something is correct, maybe they think incorrect, maybe they think that you didn't send a return, or that the return was late, or that there was a shortage of interest when you did send a return late. So states are pretty inefficient. I mean, no matter how good you are, you're going to get notices, whether you're doing them yourself, whether we're doing them, whether different third parties doing them. Notices are going to be generated. Now, a notice can be sent by mail, can be sent by email. You got to be looking at these. Sometimes they don't send it by mail or email. Sometimes it's just in your online account. So notice management is a big part of tax return services, I believe. We automatically check these notices and we correct the notices. If it's the state's fault, we do that on a complimentary basis. If it's our fault, we definitely do that on a complimentary basis. However, if it's a client issue, if they sent funds late, after the due dates in the states, well, we'll still get those corrected, but there will be a charge for that. Now, when states, when companies say that they do notice management, there are some software companies, their idea of notice management is letting you know you have a notice, and then you got to go out and get it corrected. So notice management, very broad term. And when we get to the questions to ask later on, who's actually doing what when it comes to notice management? Who's checking the online accounts to seeing if there are any notices in there? A notice can also be sent because of a filing frequency change. And you don't want to miss those, because if you miss them, then someone's got to go back and file the missing return. Say you went from an annual to a monthly. You may be missing 11 returns, or if you went from a quarterly to a monthly, you may be missing a number of returns. Now, those returns, some of new returns need to be filed, and some returns need to be amended, and there's going to be penalty and interest. So someone needs to stay on top of this and make sure that they're challenging the state, because a lot of times the state is wrong. Sometimes, payment was made on time. You're looking at the online confirmation of the payment being made, and the state's saying they never got it. Well, you just got to send the documentation showing that, yes, they did get it, and they did get it on time. So the clearing of the notices, a lot of this, states, one hand doesn't always know what the other is doing, and sometimes it's a timing issue. So notices are going to be generated. Doesn't matter how good you are. States are not always efficient. So who's going to be managing these notices? Who's making sure the ones that can be cured without paying any money are cured? And who's going to make sure the ones that actually are true issues get paid, and getting them all cleared and off the books. So this is all information that we've gone over when we were on the previous slide. Someone needs to address the notices. And when you're using other third parties out there, they may not be doing this for you. So you gotta, one of the questions, and we'll repeat this later on, when you're working with a third party is, who's responsible for notices? Who's going to clear the notices? Not just let you know there is a notice, if they even do that, but who's actually going to be clearing the notices? All right, so we have some clients, accountants as a rule, they want to make sure that every penny balances. And we've gotten some new clients when they first come on board, and the accountant is the one who is doing this. They want to know why they can't reconcile everything to the penny. And there are going to be discrepancies because, in some states, sales tax is collected in dollars and cents. But when you do the returns, they're filed in dollars. So you're going to be rounding. There's rounding issues. There are discounts when you file on time, or when you prepay, or you have vendor discounts, they sometimes call them. They're going to be between a 0.25% and 5%. Sometimes they're capped, sometimes they're not. So if there's a discount, you're going to end up not balancing to the tax collected either, because the state's saying you don't have to give us all the money you collected. Very rarely do they say that, but when you're looking for why there's a discrepancy between tax collected and tax remitted, this is one of the big ones. Rounding issues, discounts, and then state charges. There are some states out there that charge renewal fees. State of Arizona, all the local jurisdictions, or every time you sell into a new jurisdiction, there may be a new fee. There could be penalties or interest. So that's why the amount of tax remitted is not always going to match the amount of tax collected. So reconciliation, not always easy. And some of our clients wanted the returns to match to the penny. That's never going to happen. So we solved it. We send what's, in the beginning of the month, a funding request. And the funding request is going to be based upon the tax that was actually collected. At the end of the month, we do a reconciliation, and that is going to show the actual amount of tax that was remitted. Then it's going to tell you what the difference is between the tax collected and the tax remitted, and then why there was a difference. So our clients, some of them, have found this invaluable because they can give it to their accountant and the accountant can balance everything out, or they can see why it doesn't balance out. And it just saves a lot of time and headaches and heartache too. So data. A few states allow summaries, but many states require breakdowns. So you've got to have invoice level detail that includes gross sales, tax collected. Some states want exempt sales rather than the tax collected, and they'll come up with those figures themselves. Taxable sales, is something sometimes they'll ask for. Gross sales sometimes include Amazon sales. Some states will make you include those, even though Amazon's collecting the tax, and then you back it out in other states. So every state is going to have a little bit of a difference as to what the data you need to use in order to get it on the return. City, state, and zip it's needed a lot of times. So this is, we always say that the more information that you give us, the better we're going to be, but we at least want the gross sales, the tax collected, the city, state, and zip. All right, so treasury function. When we talk about treasury function, that means who's going to be paying the return or how's that return going to be paid? A big problem is that many of these states don't allow payments from foreign banks. So if you're an international seller or if you have international clients, they can't send the money directly to the state. And many states do not allow ACH credits. They only allow ACH debits. A lot of states don't allow credit card payments, and some states want online payments a day early. We mentioned Florida and Texas already. So you got to understand these things when we're talking about that treasury function, who and how the payments need to be made. With us, we have, one of the ways that we solve a lot of these issues from our clients for our clients is that we set up an account. It's our account, but we nickname it for the client. All the money is segregated, so each one of our clients has an account set up for them so that the money is not commingled with any other taxpayers out there. All that money is segregated. And then the international client could wire us the funds directly from their international bank, and then we'll turn around and pay it to the state. Sometimes they're using these bill paying services that, for whatever reason, can only do ACH credits. They send it to us, and we'll then have the ability to let the state debit it out of this account that we set up. So another benefit of having a separate account, by the way, and this was one of the horror stories that I just talked about. If you give them your primary account, the state knows exactly if there's a problem. States will sometimes come in and levy your bank account or freeze your bank account, and then you can't make payroll or lots of other problems. So you definitely want a separate account to be paying your bank account to be paying your taxes out of. And if you're using a third party, that's even one more step removed. So a lot of our clients like the fact that the state doesn't have their banking information. They got to work that much harder if there's ever a problem to try to figure it out. This is, again, just a recap of what we've just been talking about. Third party moves you money from excuse me, this is not what we were just talking about. This here, some third parties and some of the software companies are going to move the money from your bank account directly to the state. We don't think that's a great idea for some of the reasons I was just talking about. The state has full access to your bank account. Maybe they have limited access to your bank account, but we think that you should be opening up a special account just for taxes. So if you're working with a provider who is going to take the money directly from your account and transfer it directly to the state, you definitely want to set up some type of special account so that if the state does come back, it's not materially impacting your business. And then, big four companies out there, sometimes they can't move your money if they're doing any audit work for you. The big four and larger companies like this. And they have to use a fourth party. So not only do you have to pay them to do your returns, now you got to pay another company to actually move the money. And it adds quite a level of cost in there. So those are the different ways that money does get moved. So, if you're paying the states yourself, if you're not using a third party, I would definitely set up a special account so that the state just has limited access. If they want anything, they only know about this one account, and generally, you're just going to move the money into that account when you're ready to pay your taxes. So, Ellie, why don't we go to the next polling question?
Absolutely. That should be up on everyone's screen right now. Quick reminder, you do have to answer these poll questions in order to receive CPE credit. True or false question about notice management. Notices generally come by mail, but they can also come by email or be posted to your online account. And Mike, if you want to review this one quickly, I can leave it open for people as we move forward and they can have a chance to answer it.
Yeah, that is a true question, true answer to that question. Notices can come by the regular mail, they can come by email, they can also just be posted to your online accounts. So someone's got to be responsible for going through all of that potential correspondence or postings and take care of those notices, make sure that they are cured. All right, so red flag. A red flag is an issue that draws the state's attention to your account. And when you have a lot of red flags, that increases the chance of an audit. Now, here are some common red flags. This is by no means an exhaustive list, but a pattern of filing returns late, a pattern of filing substantial amounts of exempt sales, returns not balancing to what the state expects. So if you're doing returns by paper, this could be an issue, or not all online systems are as strict as others. So if they're not balancing to what the state expects, that's a red flag. And then the incorrect forms, the incorrect rates. Now, incorrect forms, if you're collecting sales tax or registered for sales tax, but you're trying to file a vendor's use tax, that's a problem. The incorrect application of credits. This is a big issue in a number of states. Some states allow you to take a credit for sales tax paid on a purchase. Other states do not. So forms completed incorrectly, et cetera, et cetera. So these are just some of the red flags that can increase the likelihood of an audit. So what you want to be doing is limiting as many red flags as you can. Doesn't mean that you're going to avoid an audit, but it will lessen the chances of being chosen for audit. So when it comes to sales tax returns filing, you can do it yourself, and you can do it manually. That's not too bad if you have a limited number of easy states. Some states are very easy to file, some states are a nightmare. It becomes a lot harder, it becomes a lot easier if you have a lot of states, if you're using specialized software. There's certain softwares out there that you can utilize to prepare the returns. And the software can be expensive, but it can save a lot of time and energy, especially if you're filing for multiple entities in multiple states. And by the way, utilizing software is different than letting a software company file on your behalf. Software companies are great. If you've been to my webinars before, you're going to hear me say this over and over again. Software companies should stick to what they do best, which is software. When they start offering services and filing is a service, that's when the problems really start to come in. So using software is a whole lot different than letting a software company file on your behalf. So doing it yourself, here's a big one. Illinois, and there was a loophole that we used to tell our clients we were not filing returns for to do. They are going to have a problem because for someone who has an in-state warehouse, you have to register for the retailer's occupation tax and use origin-based sourcing. If you're a remote seller, no ties to the state except for an economic nexus, then you use retailer's occupation tax, but destination-based. And in Illinois, there's almost 4,000 destinations you got to worry about. It's a whole lot more complex to get the rates right. And then when it comes to filing, we had to hire 3 people just to take care of this extra burden because the software we utilize doesn't handle this very well. It doesn't interface with the way that Illinois wants it done. What we were telling if we're doing your returns, it doesn't matter what you do. But if you're going to do the returns yourself, we were telling clients, go ahead and create a physical nexus, send a salesperson into the state, because then it was a third way that you needed to register. And you could register for the retailer's use tax and not worry about the local rates at all. But they're closing that loophole as of January 1st. So now everybody, except if you have a warehouse in the state, I guess a planning point here is open up a warehouse in the state and you are the retailer's occupation tax and origin, which means that you only have to worry about one rate at that one location versus the rates in these 4,000 different jurisdictions out there. And making sure that gets filed correctly. So here are some potentially tough manually filed states. Arizona, you've got the local jurisdictions. California, very tough when it comes to balancing. Colorado, again, the local jurisdictions. Illinois, we just spoke about that. Louisiana, the local jurisdictions. Missouri, New York, New Mexico, Tennessee, Texas, Virginia, and Florida. All of those are tougher states when it comes to manually filing returns. So sales tax return filings, I mean, you can hire a third party. They call that managed returns. When you're doing managed returns, you can hire sales tax specialists. We would consider ourselves a sales tax specialist. You can have your existing accountant or bookkeeper do it. And sometimes, they may have had a SALT program and they state and local tax, and they've been doing returns for years, multi-state returns all across the nation, or they may be recent newcomers. Because a lot of these software companies say, hey, just utilize our software and you too can be a sales tax expert. So you got to know what their experience is. When it comes to the software companies, I don't like software companies doing services to begin with. But if you're going to deal with a software company, make sure are they a full service software company like an Avalara or Vertex? They'll be able to do all of the returns that you need them to do. Their issues more along the customer service side. But then you have these limited service software companies like a TaxJar, and for whatever reason, choose a state like in Oklahoma. If you're a remote seller in Oklahoma, that you're supposed to be registered for the seller's use tax or the vendor's use tax, and you don't worry about a number of things like income tax and registering with the Secretary of State and everything else. It's a much easier process to get registered, much easier process to file returns. But for some reason, TaxJar couldn't do it. So they were telling all their customers, oh, just go out and get registered for sales tax. Well, that's a huge, huge issue. Now you're generally going to be subject to the income tax. You got to register with the Secretary of State. You got to get a registered agent. You got to pay for the sales tax registration $25. I mean, it's just a nightmare. So if you're going to use a software company, make sure that are they a full service company or a limited service company? Managed returns, not all preparers are created equal, even within a group. Sales tax specialists, not all of us are actual specialists. Since Wayfair, it seems that everyone is calling themselves a sales tax expert. Some sales tax experts don't offer returns or are very new to offering the returns. Some people will say they're a sales tax expert, but they're not even doing your returns. They're white labeling it and having one of these software companies doing it. So are they a broker? Or are they actually a sales tax expert and doing the returns yourself? And some of these companies are going to send you data overseas for low cost preparation. We do everything right here in the United States. I think that's important. I don't want my data out in Pakistan or the Philippines or wherever someone's going to be sending it. I think that's very important. So your existing accountant, bookkeeper, some are great. As I said, they've had strong SALT programs for many years. Some are new since Wayfair. The software companies tell them they too can be sales tax experts. Just use our services. We'll support you. And then they sign up, they get you signed up, and then they find out after the fact that they don't get very much support at all. So software companies good at software and or marketing, not so great at services. We've talked about the differences between a full service company and a limited service company. Um, One of the main services with these software companies can be customer service, and the ability to get correct and timely answers can become quite frustrating. One company doesn't even allow calls or emails anymore. You actually have to open up a trouble ticket, and that was Avalara. And here's, a statement that they made beginning January 21st. All inquiries must be initiated by submitting a support case. I mean, they had a problem with customer service. I don't know about you, but I'm not a big proponent of having to open up a trouble ticket. So I think they took a bad scenario and made it even worse. You can no longer call the person who was your point of contact before. And by the way, that point of contact was just a customer service person. They may not have even have known how to spell sales tax. And they definitely knew nothing about the returns. And you were playing a little bit of telephone because you would tell them the issue. They'd have to go get an answer. They'd come back and they didn't get quite the full answer and then relay it to you. I just saw an announcement the other day, and they're now going to be using AI to answer a lot of your product and service questions. And right on there, it says AI is fairly new and you may get the wrong answers. So, I mean, software companies, they're good at doing software. They're not great at providing services. Okay, so these limited service companies in particular can create a lot of these red flags for you. They can't use the right returns. They balance, as we were mentioned about TaxJar, they're one of the limited service companies. So some of these issues will show up immediately. Some don't show up for a year or two or more down the road. All right, so you're more likely to be ordered for sales tax than for income tax, and there are a lot more returns filed for sales tax than there are for income tax. So more returns equals more chances for error. In addition, the states are generally more aggressive and can be harder to work with than the current IRS. So the moral of this story is to find out if your provider is right for you before you sign an agreement. I mean, some of these companies, you sign an agreement and then you find out that, oh man, this is not for me. You try to get out of it, they're going to charge you a full year's worth of service. So cheap is often the enemy of good, and large companies should think 3 times before going with a limited service provider. I mean, there's just too much at risk there. You can't be fooled by the large amount of customers they say that they're doing. Large marketing budgets get companies in the front door, but these companies with the large marketing budgets are, the companies are coming out the back door just as quick as they're going in the front door. So here are some points to consider. How much time do you have to devote to the returns process? How much time do you have to devote to sales tax in general? Are you going to be downsizing? Have you downsized? What else could you work on rather than sales tax returns? Are you having a hard time hiring people to do your sales tax returns? And do you have people leaving or have they left during the Great Resignation? And, is that going to be another issue on a going forward basis? So the questions you want to ask when you're talking to these software companies or anybody, who's going to be your point of contact? If you got a problem, who can you talk to? With us, provided it's not during that 5 days that are paramount to filing the returns, you get to talk to the person who's actually filing your returns, not between the 15th and the 20th of the month. That's when most returns are being done, but before that period and after that period. So who's going to be your point of contact? What's the problem resolution process? Who's going to confirm that all the sales tax that was actually collected has been remitted? Who's going to track the messages in your online account? These notices, general messages. So these are questions, you've got to be asking whoever is going to do you the returns for you. Notice management. What exactly do they consider notice management? What is your responsibility when it comes to notices? What reports are provided? What reports can they give you for bank reconciliation? What's going to make it easier for you? Reports of returns filed, tax remitted, etc. Who confirms that all the tax collected is actually remitted? I said that twice because that's a huge one. When you're dealing with these software companies, they have certain people filing certain states. No one's looking at the account as a whole, and we're finding more and more companies have tax collected, not remitted, when they're actually dealing with these software companies than ever before. So more questions to ask when it comes to late penalties and interest. I mean, if your provider makes a mistake, shouldn't they pay the penalties and interest? Well, not everyone does. So you got to ask them who's responsible, under what circumstances, who's actually preparing the returns, or is the person you're contracting with preparing the returns, or are they just white labeling it out and someone else is doing the returns? Where does your data go? If you care. Some people don't care that their data is going overseas. How many multi-state tax clients do you prepare returns for? How long have you been preparing returns? Do you have the expertise to defend me if we're audited? I mean, audits happen. I mean, you can't prevent an audit totally. You want to make sure that you're able to limit your exposure as much as possible. So if someone's doing your returns, can they actually defend the positions they're taking? Can they help you? Some best practices: you got to keep a record of all the returns, filings, and payment confirmations. You may need those to clear notices. You got to keep all records for at least the statute of limitations plus a cushion in case of audit. We generally keep everything for 7 years minimum, and we would suggest that you do that also. You got to check your accounts periodically to ensure all tax collected is actually being remitted and that you're not paying more tax than you've actually collected. And you got to make sure your gross sales match your gross sales listed everywhere else. And Ellie, let's go to our final polling question.
Absolutely. Really a big quiz for everyone here. Are you joining us in 2 weeks? It's the bonus pillar. This is the 7 pillars that we're going through, but there is a bonus pillar, like I mentioned before. We really hope to see you there. And a quick reminder, you do have to answer these questions in order to receive CPE credit. Mike, you can move forward. I'll leave this open for a little bit for everyone to get their answers in.
All right, so let's go over a cautionary tale. Tale number 1: a salesman convinces a company to go with the streamlined sales tax program. I am not a big fan of the streamlined sales tax program at all. There's no visibility into the accounts. You're limited as to what companies you can go with. So anyway, the software company began collecting taxes and filing returns. The sale pitch from the salesman: everything will be handled. You have no worries. Well, 3.5 years later, only state taxes were filed in Colorado and Louisiana. So over $1 million of local tax was collected, not remitted. So this software company took no responsibility whatsoever. They're the ones who are collecting the tax, yet they're not remitting it all. And they never reached out and said, hey, for the last 3.5 years, you've been having all of this sales tax collected, not remitted, accrue, and the penalties and interest was stacking up. This company came to us, they were livid. And unfortunately, there was a lot of money involved. We had to do over 100 VDAs. Now, we did them at deeply discounted fees, and it's still, they had to pay $1 million. What's the penalty? Excuse me, the interest on $1 million over 3.5 years, because most of the penalties was waived. So this software company became our client, and they had multiple companies. I think that, since they came over, they've now moved 7 or 8 different of their companies over to us. So, you got to make sure that everything is being handled. You can't just you believe what the salesperson says and forget about it. You have to be following up on these types of things, in my opinion. And Ellie, do we have any questions right now?
We do not. Is there anything else that you want to go over?
Yeah, we can do another cautionary tale. A lot of these are the same type of things. This is a different software company, similar issue. Streamlined sales tax, not involved in this one. Software company began filing the returns. They no collection, but all the data is rerun through the software company. 2 years later, only taxes filed in Colorado and Louisiana state. No communication ever. Software company takes no responsibility. That's going to be a common thread. We had to do a few VDAs, and the smaller amounts, we worked with the local jurisdictions to get that remitted. Again, became our client, and they've given us multiple referrals since that time. Cautionary tale number 3, software company collecting and remitting for a company. Sales taxes being collected in Virginia. However, the software company never files a Virginia return. Instead, they file 4 years of $0 consumer use tax returns. Now, this software company was the one who's actually collecting the sales tax. Yet, they're filing consumer use tax. 4 years, $0, no communication ever. They see this money that is not being filed. Software company takes no responsibility. And by the way, we finished this one. We worked it out. And again, the software customer becomes our client. There's another cautionary tale. Salesman convinces a company to go SST. The software company begins collecting the taxes and filing return. Sales pitch. Everything will be handled. No worries. Now, when it comes to Washington, you don't have to just worry about filing the sales tax. And whoever's doing the sales tax returns usually will file the business and occupation tax. It's actually part of the sales tax form, except if you're going through the streamlined sales tax. It's not a part of that form. So if you're filing through a company that's utilizing the streamlined sales tax, this is not getting filed. So this company gets a call and they owe hundreds of thousands of dollars for the business and occupation tax. I mean, this was a huge company. The penalty in Washington is 39%. I mean, that's huge. So, you can't just listen to these salespeople. Everything's going to be handled. Don't worry about it. And the software company takes no responsibility, because in the very, very small print on page 11 of a 23-page agreement, it says that you may be responsible for additional returns and that they don't file everything. So you got to read the agreements. You got to know what you're responsible for. And free is, free is never free. Yeah, you're going to end up paying for it eventually. That's why I don't like the streamlined program. I mean, it's hurting companies, and it's so hard to follow up. If you have a normal online account, you can go in there, you can check, you can make sure that everything's being filed, you can see the notices, you can see that everything, all the tax you're collecting is being remitted. There's a lot of visibility there. When you're dealing with the streamlined sales tax program, you have none of that in most states. Maybe they'll change it on a going forward basis, but it's just not there now. You're in the dark and you've got to rely on a software company. And boy, does that make me nervous. Makes me nervous for you if that's the route that you decide to go. Because I make jokes about this. I think I should be paying these software companies referral fees because a great majority of our business comes from people who have experienced problems with these software companies. And I'm not talking about small problems. I'm talking about hundreds of thousands, if not millions of dollars. So Ellie, moral of the story is ask the right questions. Know what your responsibility is. Know what the capabilities of the company that you're going to be contracting with are. And if you're doing this on your own, just make sure that you're keeping records of everything and that you are going out and you are checking your online accounts to make sure that there are no notices out there. Make sure you're checking the email. When someone leaves the company, make sure that the emails inside these state accounts are getting updated or that email is being forwarded so you can get back into the account. And if there are no more questions, Ellie, why don't we thank everyone for coming.
Yeah, thanks so much for coming, everyone. We appreciate you being here. We hope we see you in 2 weeks. And remember to fill out that survey. That'll pop up for you automatically or be emailed to you tomorrow in order to receive CPE credit. Please give us like 48 business hours to get that out to you. And we'll see you next time.
Thank you, everyone. Bye-bye.